going berserk next coming week. So key points: trade deal happened between Canada and UK. Another boost. Another key point is that if the negotiations are still going on, that means there is some kind of a agreement happening. That means the both parties are trying to reach some kind of a deal, which is a good signal for UK businesses and UK economy overall. And for pound, and if there is a trade deal, as I said, we're gonna see GBP flying really strongly. As I said, could see GBP closing in the week next week as high as 1.3483. And if that breaks, guys, the GBP will not stop before rising 1.35, which it did rise on 13th of December. Just as I said, this was the year high. But if there's a good trade deal, and if this high is break 1.3481, then we could see the yearly high, the multi-year high of 1.3516 being reached by end of this month or by end of this year. So GP looking really promising in terms of trending. It could trend quite strongly, could rise about 300 to 400 pips by end of this year. Keeping a close eye, GP really moves about. But the positive thing we have to look at is GP has broken above this resistance, which is a strong signal for buyers who are waiting at this resistance level. So they were waiting for a breakout. Now they've seen the breakout. If I go to short time frame quickly, we can clearly see that the breakout is quite strong. And if the GP does come back and retest this resistance line, that would give a lot of confidence into buyers, and we could see buying pressure coming in the market and pushing the GP upwards. So that's our GP outlook, guys. We're going to quickly look at major pairs. So first major pair we always start with is the XY. We always look at the DXY first before looking at major pairs. But DXY is dollar index. Once we know how DXY is doing, we can actually plan out how the other major pairs are doing against dollar. So DXY again, not really moved whole week. It just been ranging between 192.92 point between this resistance level, two resistance level of 92.65 and 92.16. So ranging in about 50 points mark. So between these two, not going anywhere, not going down, not going up. Again, next week we do have some important news for GP. For dollar. So first thing we look at is, it's not volatile news in terms of news, but it does have quite important news. So for example, next week we do have important news of CB consumer confidence, which is quite important, which shows that how consumer confidence, how much there is a confidence into the current economy of normal consumers. Also, the rising cases in US is going to play a strong role in how US market moves next week. So first important news is that. Second important news, we're going to be looking at core durable goods. Again, quite important news. It talks about how much goods were ordered this past month, and it's quite important, guys, because it's only monthly. So every month this data is looked at. So any data which is monthly is much more important that comes out every week. So those two news are one of the major news that we're going to be looking at next week. So again, let's see what could happen. If the news is good and it's positive, we could see finally, DXY breaking above this resistance level of 92.65, which has been trying to do, for past, let's just see when they tried to do that, 30th of November, then again 19, then again, 2 times on 19th of November, but it failed both times. So that just shows that, DXY does want to move above this level, but as soon as DXY reaches here, sellers come in the market to push the price down, and then buyers gets exhausted. So if there's a two positive news next week, we could see DXY finally breaking above the 92.65 level and rising into the territory of 93.06. Let's quickly see what will happen if that happens. If that happens, guys, then we could see GP plummeting lower. Could see GP dropping back to those lows of 1.3221, retesting this 50 ms support level and maybe rising back again. But overall, the two important news, again, Brexit news and that two news will be really important for us to see where GP can really move, because if the two Brexit news is good and the two news of US is good, most likely investor will go towards GBP. So GP could still rise against dollar if Brexit news is really good, because Brexit news is much more bigger, because it's been going on for so many years now. That news has much more impact than these two news. As I said, the news that comes out every month is much more important than that news that comes out every week, and the news that comes out once a year is much more important than news that comes out every month. So again, if that does happen, we could see GP, climbing strongly. But Euro is currently looking like, quite a strong sell, because they failed to break above the resistance level of 1.1864. So again, if Euro next week, if dollar starts rising, DXY finds some kind of momentum upwards, we could see Euro dropping quite strongly, guys. First level I'm thinking is probably this E50, uptrend line support level of 1.1833. If that level breaks, guys, you could see Euro coming back to the lows of 1.1786 and retesting the 60% Fibonacci support level. And if that happens, guys, that's going to give us quite a strong momentum downwards. So be keeping a close eye. Euro is one of the major pairs we'll be looking at next week because it could give us quite a strong momentum, sell momentum, and it could give us very good opportunity for us to enter the market as a sell for Euro pairs. So we'll be keeping a close eye how Euro plays about. Let's go to short time frames. On short time frame as well, similarly, we can see that Euro dropped quite strongly, but the market closed in a very strong bearish momentum. This could be a signal for next week. This could show us that next week Euro will continue the bearish momentum. And again, as I said, the first place I'm looking that Euro could drop to is 1.1833. Another major pair we're going to be looking at is USD JPY. So USD JPY, if I go to longer time frame, you can clearly see that it's been ranging as well, trying to form a double top. So that's the first top. The second top is about to form. So if it does continue the pattern of double top, the first top is formed. It could ride all the way back to this neckline. So this line is a neckline because we can clearly see that's the first top, neckline, second top. There's going to be neckline. That's going to be the neckline. 104.14 is the neckline. So what could that mean is that we could see USD JPY rising as high as this. So once DXY starts rising, USD JPY will rise, will retest this neckline, and once this neckline breaks, USD JPY will fly, guys, because we can clearly see such a strong downtrend. So when a trend reverses, it goes stronger upwards. So we can clearly see that strong downtrend, but when trend reverse, it went up strongly as well. So when a very strong downtrend, after a very strong downtrend, there's usually a strong uptrend followed by a very strong downtrend. A very strong uptrend is followed by a very strong downtrend. So keeping a close eye at this neckline, we are main level of interest is 104.14 resistance level, because this is a neckline. If this neckline breaks, we could see USD JPY actually flying quite strongly, and that could happen again if DXY starts rising next week. We could see all dollar pairs, dollar rising quite strongly against most of the pairs such as USD JPY, Euro USD, GPSD. We still can't be sure. We still have to look over the Brexit news for us to be sure what will happen. If the Brexit news is good, we're most likely going to go long on GP against dollar, even though dollar news will be good. So another thing we're going to be looking at right now is gold. So going to quickly look at gold now. Gold currently, again, you can clearly see this box of mine is the ranging box, so it hasn't been really moving up and down only. Again, as I've been saying for some time now, I do think gold will break 1900 mark by end of this year. Hopefully it does, because if it doesn't, then that will be a really bearish momentum for gold early next year, because the vaccines are coming out quite strongly. A lot of countries are announcing they might start releasing vaccine as early as the next month for most effective and elderly people. If that happens, guys, then that's a very bearish momentum. That's a very bearish signal for gold. The reason is because gold is a safe haven asset, so people usually buy gold when there's issues around the world. Why? Because gold never loses value. Currency loses value, stock loses value, but gold doesn't lose its value. So that's why gold is such a strong hedge commodity against risk sentiment. But if there's no risk, for example, stocks will start rising because a vaccine will be out there, people will start going back to work, companies will be starting opening up more, the jobs will be starting getting created, and that's a very good signal for economy. So what would investor do? They rather invest in the country, they rather invest in the currency, they rather invest in the stocks. Then what will happen is they'll start pulling all their money out from gold, which they have invested in gold because of the pandemic, and then we can see more gold downward momentum. But that could be but one reason I say it could rise is because we still have massive lockdown pending in US. So US could announce as early as next month, guys, that it might go in lockdown again, because the rising case in US is crazy. Every day there's about 3,000 deaths in US, and for that they need to calm that down. They need to do another lockdown. If that happens, guys, that's again a very risky sentiment. Investors will get scared again, and that will push gold above 1900. As I said, it could rise as high as 1972 by end of this year. So keeping a close eye how gold really moves. But overall, I do think gold is still on a strong uptrend. We'll be looking for buy. We'll be looking for buys only in gold. We're not looking for sells, because I do not think gold will actually drop below this 1848 level anyway. So we could look for short scalp on gold for for a sell, but overall we are going to be looking for buys. But I would not enter anything right now, because gold is in the middle right now, so it won't go up. It can go up, it can go down. So for me to enter as a buy and to see a break of this 1880 level, or for me to look for a sell, I need to see a break of 1848 level, long-term sell or long-term buy on gold. So that's our pairs and commodities outlook for next week. We'll be talking about EMA strategy. So what's an EMA strategy? So I'm actually gonna go. I have a 50 EMA. So this blue is a 50 EMA. I'm gonna add another EMA. So I'm just gonna add. Let me go to my favorites. moving average, and I'm gonna change this to, I usually use 20 with 50, and I'm gonna change the stars so we can see a bit more better. I'm changing to red. Okay, so basically what does EMA strategy mean? So EMA, usually the most basic strategies in EMA is EMA crossover. So when a short-term EMA crosses below a longer-term EMA, it usually means it's a sell trade. It usually means the market is about to go down. And when the short-term EMA crosses above longer-term EMA, it means that, market is about to go up. So around this example here, when a red, which is a 20 EMA, crossed above a 50 EMA around 4th of November, around 10 in the night, that signal as a buy. So we can clearly see the price went up. And on 11th of November, when short-term EMA, which is 20 EMA, crossed below this longer-term EMA, we can see the price went down. So sometimes when market is ranging, it's not best to use EMA strategy, because when the market is ranging, you see something like this. So over here, it crossed, but then it crossed below. So you would have go out, if you entered the trade as a buy, you would have got stopped out most likely. And over here, example, same thing. If you entered as a sell, you might have got stopped out because EMA crossed straight after, about like, in about 4 hours, 8 hours, it crossed above. So what we do is we do not use EMA strategy when the market is moving. When market is ranging, we usually look for EMA strategy in a trending market. For example, something like this. You can clearly see GPSD is a trending market right now, and the EMA strategy works a lot better compared to a market which is ranging. So you can clearly see that on 5th of November, when a short-term EMA crossed above a longer-term EMA, a blue, yellow, 20 EMA crossing above 50 EMA, we can clearly see that there was a start of a very strong uptrend, and you can clearly see that price is still going up, because EMAs, you can see the difference between EMAs. The further the EMA from each other, that means that the stronger the trend. So once the EMA starts pulling back closer and closer, for example, it starts dropping and it's coming close to this blue line, that could signal for us to, if you're on a long-term trade, that would be a signal for us to get out the trade, and there might be a strong sell coming in the market. So again, EMA strategy is simple. For example, another example here on the 7th of September, when a 20 EMA crossed below 50 EMA, it was a very strong downtrend, which ended. I mean, most of the people would have gone out when they around here, but then it didn't end. It didn't cross over, so that would be another possible entry there. But then it did end on the trade did end on 1st of October, when finally the longer term EMA, short term EMA, if 20 EMA crossed above 50 EMA on 1st of October, there was another strong uptrend, start of a strong uptrend. But when markets started ranging between 19th October and 21st October, you can clearly see that this EMA strategy would not have worked. As I said, if there's a market ranging, should not use EMA strategy because it would not work. But it's quite a simple strategy, guys, but only it works if the market is ranging. If you're going to use this strategy it only works when the market is trending. So if you're going to use this strategy in a ranging market, you're most likely going to get caught out quite easily, which is going to affect your account, which is going to affect your trading. So if you have a trending market such as GPSD is one of the market that trends a lot. GPSD, JPY is one of the market that trends a lot. EURUSD is one of the market that trends a lot. The pair I would not recommend you to using this EMA strategy will be AUD-NZD, AUD CAD, Euro-NZD. These pairs don't trend that much, so I would not recommend you to use that strategy. So we use 50 EMA and 20 EMA. So 50 EMA close and 20 MA. So moving exponential moving average and a moving average we use. So we always use 50 is right now is blue line and 20 is the red line. So simple strategy, guys. If the market is trending and a short-term EMA crosses above a longer-term EMA, it means it's going an uptrend. And if a market is trending and it crosses below a longer-term EMA, it means it's a sell market. It means a bearish market. All right, guys. Thank you for joining us. If you have any more questions, please do let me know. It's a Q&A session right now. So if you have any pair you want to look at or anything other than pair, such as EA, if you want to learn about more the EA we have been running or anything else, please do let me know. All right. Thank you. We shouldn't say Swift, I think we should say iBig. Big code. German 30. We're not looking at stocks right now because stocks trading is quite volatile in the market right now. We're not looking at any stocks. German 30 is usually D30. We can clearly see the German 30 or D30 is not moving at all because of the Brexit issue. So this stock market would not move unless there's a clear news from Brexit. So I would not recommend trading any German or Euro stock right now. unless there's a Brexit news, because you're going to get caught out. A ranging market is the worst market to trade for a retail trader. Is the EA based on marketing strategy? No, the EA is not based on marketing strategy, because marketing strategy is one of the worst strategy out there. What it does is basically opens longer and longer lots to cover your losses. It is not based a marketing strategy. It uses own is artificial intelligence. What it does is it opens few positions, like 3 positions on same lot sizes, and once 5 trades, and let's say you have 8 trades and 5 trades in positive, it will close all 8 trades. Why is that? Because it never leaves its losses running ever. So you will always close trades at same time. So it will close all 8 trades in one go, because it knows those 5 trades have made enough profit for it to cover the losses. So that's the best thing about this EA, guys, that it covers the losses at all times. One of the issues that a lot of retail traders, a lot of other EAs has, it only closes the positive trades, never closes the negative trades. That this EA doesn't do that. It closes all the trades at the same time, because it knows that even the 3 trades are making enough profits to close other 5 trades. It will close all of them together. How do you break down a chart, and how to make it simpler for beginners? If you're a beginner, what you should do is you should not have anything on the chart. You should have a clean chart. Let me just hide everything. And you should just, I don't think this would be it. You should start with you should look at pairs which move a lot, such as GPSD. So you should not have anything on a chart. Just look what's happening in the market. If it's going up, just do a naked, look at the market. So just zoom out a bit and see what the market is doing. So market is moving upwards, right? So it's a basic uptrend. Now start looking for, possible support resistance. So one of the resistance is this, because every time price switches, it drops from here. One of the support level is this, because every time price switches here, it goes up from here. So now you know your support resistance. Next thing you do is start looking for entries. So usually what we do is we draw a support resistance on a longer time frame and look for entries on a shorter time frame, because it gives us an overview where the market could be moving. So on longer time frame, we can clearly see that price has broken above resistance level. So we'll be looking for buys only. So one of the places we could look for buys is when price retests this resistance and support level. So when the price comes here, we could look for a buy, or we could see a fake breakout back into this and we could look for a buy there. So this could be you could buy now. You can buy now as well. Put your SL below this resistance level or support level now, and put your TP, let's say, around here, because that's the highest it's been. Or you can wait for market to come to you. So you can wait for a retest at this support level and then enter as a buy. So that's as a beginner, you should not be using a lot of indicators or a lot of strategies. You should be just using a simple support resistance, in technical analysis, because that's the easiest way to learn trade. If you use a lot of indicators, you're gonna get confused, and that's gonna put you off trading, because you won't understand what's happening. What's the best time frame? There is no best time frame, to be honest. It depends what you're trying to do. For scalpers, as we do scalp, we look at 15-minute time frame. As a long-term, if you're a long-term trader, you want to look somewhere from daily to 4-hour time frame. So if you're longer term, for example, you're trying to cash, let's say, 200-300 pips, then I would recommend looking at daily time frame and then looking at 4-hour time frame. But if you're a scalper, we usually look at 15-minute time frame to enter our entries for scalp. All right, guys. Any more questions? All right, guys, thank you so much for joining today's Zoom lesson. If you have any more questions, you can always ask us in our group chat, on the WhatsApp, or anywhere else. Again, if you have any more questions about EA, which we are running, you can always ask us as well. This EA is used, but it's a bank level EA. So every big hedge funds in the world, they use EA. They can't put thousands of orders every day themselves. So that's why they have EA. EA can open about 50, 60, even 1,000 of orders using proper strategy, which human cannot do physically. So that's the best thing about this EA. And this EA is being created with our strategy. So the EMA strategy I just told you about, it has that strategy built in that EA as well. And you can clearly see that if you can find a trend, you can make a lot of money in that strategy. So if you're interested about EA as well, you can always ask us, and we will let you know what's the requirements for it and how you can be profitable from the EA trading if you don't have time to trade yourself. All right, guys, thank you so much, and have a very good day.